What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and hit the notification bell. That way, you're notified whenever we release new videos. We release videos every day throughout the week and once on the weekend. But we also release bonus content from time to time, so having that notification button hit will allow you to be notified whenever we do release that bonus content. Make sure you follow us on X at Bullish Chips, where you can receive real-time updates about our entries and exits for not only scalps and day trades, but mid and long-term trades as well. We also offer further commentary throughout the day that helps traders make more informed decisions. If you're new to the channel, make sure you check out our other videos, including videos that offer more details about our trading method, which you can find under the bonus content on our page, or you can just click the links in the description of this video. Please remember, we're not financial advisors. We do not offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action will take us in the future. So without further delay, let's get into the weekend video. Today is August 10th, 2025, and in today's video, we'll do a quick recap of Friday's price action. We'll take a wide-angle view of SOXL's price action from the week, month, quarter, and year perspective. We'll look at what the market maker's expected move is for the week for SOXL, and then at the end, we'll set our triggers and targets for the week, and we'll get down to the day and 4-hour chart as well. So with the charts, we're looking at the day chart first, since we're going to recap Friday's action. And again, if you're not familiar with our trading method or our charting system, make sure you check out the bonus content on our YouTube page, which gives a more detailed breakdown of our trading method. The method does have a base in the strat. And if you're not familiar with the strat, I put a link to a free document that you can download that gives you the information about the basics of the strat. And I've also put a link to Rob Smith's YouTube page in the description of this video as well. Rob Smith, rest in peace, is the inventor of the strat. You can check out his YouTube page. It has years worth of videos, and then make sure you do your research on Rob as well. I think you'll find him quite interesting. There's plenty of information about him and the strat trading method on the internet. So again, it is based in the strat, but I do layer on other techniques to go along with the strat, and so I think that's why my trading method is interesting and maybe not totally unique, but has its own little flair to it. But it does produce consistent results, consistent winning results. So I stick with it, and it's worked well for me for years. So again, let's get back to the charts. Just looking at Friday's action, we hit an inside bar, or in strat terms, a 1. So price did not explore above or below Thursday's price action. We still have the gap from Thursday's gap up below us. Let me just make this a little bigger so it's more visible to everyone. So we have the inside bar on Friday. We still have the gap up from Thursday that was not filled. And so that does remain kind of like a looming magnet in a sense. But we do have our quarterly flip right here at 2438, this red dashed line. That's where the quarter opened up, right? So right now we are above the open of the quarter, so the quarter is green. And we have the monthly flip down here at 2357. And again, price is above that, so the month is green as well. If you take a look at the upper left-hand part of this page, you will find the time frame continuity indicators. So the day finished green. The week finished green because this was the opening print for the week right here, 24.59. The price again closed on Friday above that. The month is green again, like we talked about, and the quarter is green, like we talked about. Now up here we have the year flip at 28.13, so the year is still red, but we are ever closer to that full time frame continuity that you look for. Not only as a strat trader, but just as a trader in general, right? If you have all time frames going in the same direction, that can give you more confidence to, make plays in that direction, and possibly for longer periods of time. So we are still trying to flip the year green. That year flip does seem to be the top of the range that we've been in for the past 5 weeks, right? Rejecting It rejected a little low here, but rejected here, rejected here, rejected here, rejected here, rejected here. Okay, right? So we're also dealing with this monthly downtrend line that we have. We'll take a look at that from the wider perspective in a minute. So we have this monthly downtrend line that we've been contending with, and we have this weekly broadening formation right here that we've been contending with. So all of those, are points of resistance for us, but we do have a little bit of support below us. Again, the quarter flip and the month flip, those are acting as support for us. But right now we've just got sideways action, and it's a fight. From the week perspective, the trend is kind of flattened out. From the day perspective, it's been kind of flip-flopping. We had the uptrend here, we had the downtrend with the lower high here, but we made the higher low here and then the higher high to flip the trend back to at least the start of an uptrend from a day perspective. So Friday didn't give much more clarity to that. The one thing we can say is that it pushed up and stayed up and closed up. So it was trying to explore above. It did have a solid candle. This isn't a doji or a inverted hammer or anything like that. So it does show some strength, even though it was an inside bar. And again, we're at the bottom of this range, so it does appear to that it's continuing to bounce. We did have these two look below and fail moments here. Tried to get down to this lower gap, but bounced off the top of the gap, and we're back up into the range of the past 5 weeks. I think this June 13th or June 23rd. I'm sorry, June 23rd to 24th gap up. This was the gap and go, and we're stuck in the range. If we take a little bit closer look down here at like the 15-minute, and let's just pull out our some of our levels here. Okay. Again, this is Friday's action right here. Let's see, Thursday, and kind of stretch it out here. We've got Friday's action here. We opened and pushed up, got above the overnight high, made a higher low above it, and stayed above it, right? We did get rejected by the previous high day. Well, not so much rejected, but we couldn't quite make it to previous high day. But we did have the support of the overnight high, last week's 50%, last quarter's 50%. So we had support below, and we did take calls after we had a quick push down at open. We did take calls with the higher low on a very small time frame, right above opening print, and we were able to ride those up and get some good profit. But that was Friday's action. Quick push down in the morning, then we pushed up and stayed up. Didn't go too up, so didn't explore price action above the previous day's price action, but it is still a sign of general strength. Let's go ahead and zoom out now to the week perspective. Let's get back to our more clear chart here. Oops. All right, so we do have our broadening formations on here. Again, if you're not familiar with our color coding system, go ahead and hit the link in the description to our bonus content for how we set up our charts. But the purple lines are weekly broadening formations, the yellow are quarterly broadening formations, and the green are monthly broadening formations. We don't have any yearly broadening formations in play in currently where we're at, so we are not worried about those right now. But we do have, from a weekly perspective, right now we're looking like possibly a higher low. Let's make this bigger so everyone can see. Possibly a higher low. If we can get push up this coming week above this candle, and then hopefully get above that year flip, getting full time frame continuity to the upside, that would confirm that higher low right here on the week perspective. At the same time, it wasn't an inside candle, so it was indecision, right? It didn't explore below or above, so we don't really have a decision on where we're going yet. We could still come down, fill this gap, possibly even make a lower low on the on the week perspective, and then now we're looking at possibly starting a downtrend, right? It's coming from a higher high, so getting a lower low here would give us a broadening formation. So it would be from this low to, if we made a lower low over here somewhere, then we would have something like this, where now we have a defined weekly broadening formation, not just an upside, right? So then if it bounces here and we start going back to the upside, especially if we get 50% of the way back through the broadening formation, then we can start to target the higher part of the broadening formation. But we have to make sure that we get up to that 50% and push through it, because we can always, bounce off of it and then go back to it and continue to bounce down. We do have this weekly uptrend here from way back at the beginning of the bounce in April. So it could come down, bounce off, give us a little dead cat bounce, sell off again, and then we could get some support from both this broadening formation and the uptrend line, and that might be what takes us up. Now, if we do that, we're going to be, of course, in full time frame continuity to the downside. The year is going to be red, the quarter is going to be red, the month is going to be red, and you're going to be buying puts on the way down, selling calls, right? But once we get that, if we do get the bounce here, then we have to start making our higher lows and lower highs to prove that we are going to start getting to an uptrend. So along with that, we'll have to fight this monthly downtrend line, and then this month and quarter flip and year flip are then all resistance that we have to come back through, right? It's no longer support. So we don't really want to go down any further. If we do, that's fine, right? We can play it to the downside. We get, like we said, we sell, buy puts, sell calls, short the market. Once it gets down to this bounce point, once we get some type of confirmation on the day week perspective, the higher low, then we can, buy longs again and buy shares or whatever. But, we just have to keep our eyes open at this point in time, because we have indecision, right, from a week perspective. Let's go ahead and take a look at the month, right? So the month, we did go 2 down, triggering the 2 up, 2 down. But it hammered back up. We're back above the open, and it's looking like this could be a lower high. Now, we're only 10 days into the month, so we still got a long ways to go, right? Like this, we could just come back up, reject off of the year flip, and then push back down again. Who knows? Whatever. That's just a scenario. I'm not saying that's going to happen. But that still is on the board with this month at least triggering the 2 down, right? So once you trigger a 2 up, 2 down, your entry is at the low of the 2 up. Your exit is at the low of the candle to the left of the 2 up. So that would be a pretty big drop. That's taking us back down to $16, right? If it did, it would be, it would be a realized, level of support. Here's 16. It was resistance, resistance, then support, 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 support. So, it's not beyond the realm of possibility to get that pullback. You never know what might happen. What you hear in the economy or whatever, but we just have to remind ourselves that the downside is still in play, and it wouldn't hurt either, right? To get a pullback after 3 straight months of green action, right? At one point, SOXL had 7 straight weeks of green action. So I wouldn't be worried if we get the rejection. It's the world's not going to hell in a handbasket. We're just getting the pullback, and then we want it to confirm that we get support and push back up, and once it does, then we enter back longs, right? So it's not the end of the world when price starts to drop. Let's go ahead and take a look at the quarter. All right, make this a little bigger. So we are in the 2 down, 2 up on the quarter. So that's, the quarter and the month are kind of rivaling each other. With the 2 up, 2 down on the month, we have the 2 down, 2 up on the quarter, right? So with the 2 down, 2 up, again, the entry is here at the high. You would enter here and you would exit. This would be your magnitude, your target for the exit. Now, you can set your stops here if you entered here. That way, when you get these pullbacks like that, you break even or have a small loss maybe if you've got options contracts. You get that theta burn. But once because it did trigger the 2 up. This could just be a pullback, and then once price action breaks back above this level, you can get back in, go long, especially once we're above the year flip and we've got full time frame continuity to the upside. That's when you can have real confidence going long and possibly hitting the top of this weekly broadening formation, maybe closing this gap, hitting this weekly broadening formation, because not only are we in this 2 down, 2 up, we've got the 1 combo 2 down, and then if this goes 2 up and breaks above the high of this candle, that brings this larger strat into play, and the magnitude for that is the high of the candle to the left of the 1, which is this big candle, which is all the way back up at 70, right? And then you're closing all these gaps. And I'm not saying that's going to happen right now. I'm not saying it would happen this year. If it does happen, I'm not saying it's going to happen this quarter just because the quarter triggered up, right? But it's just letting us know where price action has a high probability of going, based on what has already triggered, right? Now, if it rejects and goes back down again, we're perfectly fine. The only thing we wouldn't want to do here is make a lower low. Now, we don't have too much lower to go because through the stock split, the ETF SOXL price has come down, and it's not going to go below zero. But we do have a quarterly broadening formation down here, and of course we're looking on the quarter. So if this is a lower high, we do stand the chance of coming back down and bouncing off of this, maybe the 5 area or so. If we take a look at our notes, right, from a year perspective, 2025, it triggered the 1, 2 up, 2 down, which has a magnitude of 621, right? That 621 brings us right down here around our, this is $6 right here. It could do it in this quarter. If this quarter went 3, which is pops 2 up and then goes 2 down at the same time it's already went 2 up, that makes it an engulfing candle, or what we call a 3 in the strat world. That would go down and hit 6. So it is in the realm of possibility, but currently we're in this 2 down 2 up strat, real close to re-triggering it, right? It pulled back in. I believe the highest here is 25.84. Current price is 25 or 28.50, right? So I'm sorry, what? Close was 25.71. All right, so 25. Yes, we're just slightly below the high of this candle, so we're almost back to triggering it back up. And then again, if we get that flip of the year, then we're good. The year we don't really need to look at too hard. It is a 1, 2 up, 2 down. It has not completed its strat, right? So the 1, 2 up, 2 down, the magnitude is the low to the left of the 1. That low is 621, which again plays into this strat here, 621. And we did not make it that low. We got to 723 back in April, but it didn't hit the 621. So again, that could still be on the board. We'd prefer it not be, but once the year flips, then we have a better chance of going 2 down, 2 up, which would trigger at whatever the high of this year ends up being, and then have a magnitude of the high of last year. So there's our wide angle view breakdown. Let's go ahead and get to what everybody is probably waiting for, which are the triggers and targets for the week. So to do that, let's go in here. What am I trying to do? No, that's not what I want. There we go. So here we have, let's get down on our these are our 4-hour markers, right? If you're not familiar with our 4-hour markers, again, watch we've got some videos in our bonus content about how we set up our charts and our precision trading levels. This would be considered setting up precision trading levels. Sorry. So we want to take our 4-hour trigger to the upside and move it to the high of the second 4-hour candle of Friday. And we want to take the 4-hour trigger to the downside and move it to the low of the second 4-hour candle of Friday. We'll take the previous low a day, and of course move it to the low of Friday. And we'll take the previous high a day and move it to the high, right? And then if anybody wonders why we're doing this, again, if you're not familiar with this, with our trading method, let's just go in here and look at, when you're scalping and day trading, you want to know these levels, right? So, we don't have opening print on here. Let me put opening print back on here. So the market opened here on Friday. So we'll label this OP, and it's in peach, right? So here's opening print, and our rules are price action above opening print, especially if you're getting a higher low above opening print, we're getting into calls. If we get price action below opening print, especially if you're getting lower highs and lower lows underneath opening print, we're buying puts, right? So opening print is the first line in the sand. If you get the lower high underneath the opening print, your first target is overnight low or previous low a day, or the 4-hour trigger to the downside, whichever comes first. In this case, it's the overnight low. So if we would have got a lower high here, first target would have been overnight low. Second target would have been this here, which is the previous low a day and the 4-hour trigger to the downside, right? So from 25.15, right? Say you get your lower high somewhere around 25 down to 24.53. That's a 50-cent move. And you can see here towards the price up top, a 71-cent move is 2.84% move for SOXL. So a 50-cent move is 2.3 to 2.5% move, especially if you've got multiple contracts and with a at the money or in the money put, that's gonna net you profit very quickly, right? This is part of the proven and repeatable strategy, right? So let's take, since to the downside was imaginary, let's take the actual price action on Friday, and let's look at how we got a lower high, or a higher low within this 5-minute candle, and then it pushed up, right? So let's break down to the 1 minute. This is if you're scalping. So if we've had the 1 minute here, let's get to the beginning of the day. We can see we had the push down, right? And then we had a higher low, right? This low right here was higher than the last low of Friday, right? So that's technically a higher low, higher high, higher low. That's an uptrend, but we're still underneath the opening print. So if you want a little bit more risk, you can enter here, knowing that we made a higher high and a higher low, continuing the uptrend from a 1 minute perspective. If you want to add that risk, then you can get in there. But what we like to do is take risk off the table and give us a better defined entry and exit, right? Because if you're entering here, then what are you using as your stop? And why are you using it? Are you using overnight low? Are you using the last low of Friday? Are you using this daily broadening formation? I mean, that's up to you, right? But with our method, there are defined entries and exits. So what we do is we wait. We get another higher low here, but we're still below opening print. Okay, now we get price action above opening print, which also triggers the 4-hour strat to the upside, right? You can see it basically overnight opening print basically overlaps with the 4-hour trigger to the upside that we have there. And we push up, and look at this. We get action off of this quarterly fib, right? This is the 50% of last quarter. I actually think that's the high. It's a dashed line. So either way, that's a quarter. It's a major point of control from a quarterly price action perspective. And here's where we get the higher low. Boom. Higher low. Once you get price action that breaks above this high right here, you enter. So once price action broke above here, we entered as soon as it broke above. And your first target is overnight high, which is great. We could have sold there. We had multiple contracts, but it was a small move. We were looking for an ultimate target of the previous high of day, at the very least, right? So that would give us plenty of profit. We did get above the overnight high. It did use it as support multiple times, but we just couldn't make it to the previous high of day. So, by this time, you're off of the 1 minute, because the 1 minute you're just trying to get your entry. And then you're using the 5 minute to look for your higher lows and lower highs. Just depending on how you want to play it. Again, I'm not a financial advisor, and you can play it however you want to play it. But from our perspective, we want to look at it from a 5 minute. And you could have got out right here, right? Because you got the higher low here, higher high, and then you got a lower low. But we realize that this is just making a broadening formation for one, right? This is a broadening formation. Come on. And that's a broadening formation. So it just made a broadening formation. And we have the support of overnight high, last week's 50%, the quarter's 50%, and opening print, right? So since we entered right around here, we could just put our stop here and just break even, right? If we wanted to. Or we could have moved it up to like last week's 50%. That would give you enough pullback to see if it would bounce off an overnight high. And if it doesn't, if it gets back down here, then you're selling and you're still in profit. But we decided to stay in, leave our stop a little bit below last week's 50%. That way it could give it a little bit of breathing room to really test the overnight high, because sometimes it can wick through the overnight high and just barely come to the next level and then go up. So we wanted to make sure we were below that. So that allowed us to stay in. You look at things from the 15-minute perspective. That broadening formation was just giving you the higher low on the 15-minute, right? So that's more confidence to stay in the trade. Here's your higher low, and that's where we went higher high, lower low on the 5-minute. We went up. We continued to get another higher low after a higher high. So the uptrend, it's a grind. It's not shooting up, but it's still intact. We got another high. Another higher high, another higher low, and then another. And then once we got this lower high, we know that, hey, especially for scalps that have now turned into day trades, we're looking at, and with our method, we don't buy 0 days. So if we're scalping, we're buying a week out. We don't buy same week contracts, and we buy in the money or at the money. So we don't buy way out extended targets and all of that. So what we do is we notice this is a lower high, or it has a potential of being a lower high with this red one, and we know it's with it closing very close to the bottom of this candle, that is going to be very easy for the next candle to go 2 down, therefore locking this in as a lower high. So since we had intraday contracts, we put our stop here. As soon as the price went below it in the next candle, we were out. Now it did push back up, back above where our stop was. That's fine. Those contracts were just for the day, and we got what we accomplished, right? Or what we wanted to accomplish, right? We got in around 25.50. We exited around 25.66. Not the biggest move, but we had multiple contracts at the money, and for a pretty sideways action for the most of the part of the day, it was that was good profit. We didn't lose any money, and profit is profit. The name of the game is consistency. We want to make money every day. Now we know you're not going to exactly make money every day, but if you can average out making a certain amount of money every day that will satisfy your needs, then that's the name of the game. And using this repeatable strategy is what does that. So with that, little bit of proof of how it works, let's go ahead and set our triggers and targets for this coming week. So we've already moved our 4-hour markers. Oops, let's get on the 4-hour time frame. There we go. And we can see we have an hourly broadening formation, this blue and this blue, and then we have this hourly broadening, 4-hour broadening formation, which is green. So we do have to keep those in mind. We'll get rid of the opening print for the week, or the week flip. Oops, remove drawing, because we're coming into a new week. And we know that we've got previous high a day and previous low a day after consolidation on Friday. We've got a couple gaps below, and but we are in a daily uptrend, right? So, and a 4-hour uptrend. So we are trying to move back up. We do have a daily downtrend line to contend with, the year flip, and a daily broadening formation as well. But again, that's towards the top of the range. So first goal, get back to the top of the range. Then once we're to the top of the range, fight to get out. But right now we're looking to go back to the top of the range, which has served us well over the last 5 weeks now. We've been buying puts at the top of the range and buying calls at the bottom. Buying puts, buying calls, buying puts, buying calls. Yes, they do take some patience. We have been buying, the next month out at the money, which gives us more flexibility to hang in there. But we do want to continue to follow this pattern of buying calls at the low and puts at the high until it's proven that we're going to be out of the zone, right? So the next thing we want to do, let's look at the market maker's expected move for the week. So if you go to your options chain for SOXL, at least on Thinkorswim, not sure about any other platforms. I've used Thinkorswim for years and years and years and years, so maybe that's something I need to do, is go out and check other platforms and see what they have. But if you use Thinkorswim, or if you download Thinkorswim and you go to the trade tab and go to the options chain for SOXL, and you look at this week's options chain, so August 15th, we go over here and we see there's a 93.29% chance that there will be a $2.26 move in the market. So I'm sorry, in SOXL this week. So 226 is our let's go. These are Monday. These are for Monday, August 11th. I don't know why that was 18th. That must have been for the 8th. These notes are from the 10th. And on Monday, there will be 97 trading days left in 2025. Now, the close price was $25.71. Oops, 71. So we will remove the flip for the week because we're starting a new week. This will be for the week of the 15th. We know that we have our month flips green, right? It flips red at 23.57. The quarter flips red at 24.38. And then the year will flip green at 28.13. So just at a glance, we know, looking at our notes, what's what. This will be the week of the 11th through the 15th. We'll clear out Friday's information because we won't have that until Friday. I mean, until Thursday night. But remember this here, the expected move is $2.26. So less than last week, but still a decent move, right? So let me just pull out my calculator here so it's quick. 2571 plus 226 is 2797. So 2797 will be the top of the range for the week, or the expected range for the week, and 2571 minus 226 is 2345. All right, All right, so we have a high and a low for the range, the expected move of 2797 and 2345. So, if we go back to our chart, that's 2797 is up here. Let's just give ourselves a visual. 2797. Right. We'll make this purple for expected move. We'll just call it EM top. Right. That's our expected move for the top, and 2345 is our low. Let's go. Doesn't have to be perfect, but close will be right. Oh, I got perfect anyway. This is our expected move bottom. So we can see that price action should take us either up here or down here or both, right? There's been plenty of weeks where price action will shoot up at the beginning of the week, reject, and then take you back to the bottom. But you can see how the bottom of the week's expected move kind of lines up with the month flip, and the top lines up with the year flip, right? Same range we've been in before for 5 weeks now, right? Nothing new really to report as far as expectations of taking off or breaking down, right? Because even the market makers don't expect it to go either. You know, it could have been, the high could have been up here and the low could have been down here, whatever. But yeah, we're just still in the range now. It is, you know, somewhat bullish because, right, if the more you can consolidate up here, the more this starts to, you know, kind of be a flag maybe, or just, it's just bullish consolidation as you go, building back a base to continue the move up. But we can see that that's where our expected move is for the week, right? Let's just get back in here and let's set our triggers and targets. All right, so let's actually, for the week, let's go to the week chart because we got to set that up first. So the week is lined up in a 2-1. Let's get it clearer. All right, so the week is in a 3, 2 down, 1, right? We were looking for the 3, 2 down, 2 up reversal strat. Again, it wouldn't have gave us much magnitude since the high of this candle's here and the high of the other candle's right here, but it would have put us back in a situation where we had a higher low from the week perspective, you know, continuing that bullish momentum up. This indicates we're just still moving sideways. So we've got 2 opportunities for a, you know, quote unquote reversal, right? We can have the 2, 1, 2 up. We could have the 2, 1, 2 down. And actually a third option could be that if we were to get a 2, 1, 2 up, which then turns into a 3, you know, an engulfing candle, or a 2, 1, 2 down, which then turns into a bullish engulfing candle, right? So there's 4 options that we have for this week from a strat reversal perspective. Wouldn't be any real continuation because a 1 is not a continuation of any strat. So let's go ahead and get our triggers and targets for the week. If we're looking at the downside, it would trigger at the low of this candle, which is 22.95. So let's make this week of 15. This would be a 2 down, green 1, 2 down, triggering at, once again, 22.95. Make this a little bigger for people. All right, so we'll trigger at the low of this candle, which is 22.95. 22.95, and the magnitude would be the low of this candle. That's a 2, 1, 2 down, magnitude being the low of the candle to the left of the 1, which is 22.57. All right, so magnitude, and you only have magnitudes on reversals, so that's why some of these don't have magnitudes. 22.57. Now extended targets we'll just leave as they were because they're still in play. It would be the bottom of this gap, which is 21.98, right? So we have 21.98 there. And then we had 2028. I believe that was from, if we go, no, not that. I think we pulled out a fib extension. Yeah, we must have. So let's see, 2028. The close of, the open of this candle was 21.18. 2028, what was our low? Yeah, the low of this candle was 2028. That's why we had our extended target. If we break the gap, we should probably go clear the bottom of this 3, making a lower low. Really just making a broadening formation, but it will be making a lower low. So after that lower low, we would be looking for a lower high at that point to start the actual downtrend. But for the time being, if it were to come down here, it would just be creating a weekly broadening formation. So those are extended targets. The first target is the low of this candle. Second target is the gap close. Third target is the low of this candle. All right, so we have the triggers and targets to the downside for the week. Let's look at the upside. To the upside, this would be a 2-1-2 up. So the high of this candle is 25.88. 25.88, and that would give us a 2-1-2 up once again. So this would be a 2 down, green 1, 2 up. The magnitude would be the high of this candle, so we would have a bigger magnitude to the upside. That's 28.16. All right, and our extended targets, if it were to make it up here, 28.16. We have our 30.55 and 32.64. So 30.55 is going to be this 61.8 fib of the 2020 low to all-time high, right? So 2020 low, we know what happened in 2020, and then the 2022 high for SOXL, it made its all-time high in January of 2022 instead of topping out in December like a lot of other stocks did. That's why it's the 2020 low to 2022 high. But that is, kind of when trading changed. Trading before 2020 was way different for me than after 2020, and everything in 2020 seems to still fall within the larger Fibonacci sequence for that major run-up after the 2020 low, right? So this is the 61.8 fib. That's a reasonable point of rejection, and then here would be the higher high on the week perspective, which is 32.64, which I believe, that's our final target, right, or our ultimate target for the week's move. So you can see that easy. Using the strat, using broadening formations, we have very defined triggers and targets, magnitudes and extended targets for the week perspective, right? That easy, the week is done. Let's go ahead and break it back down to the 4 hour and day perspective. So let me bring up those charts. All right, so we're back on the 4 hour. And we're looking at a 2-1-2 up or a 2-1-2 down, right? Same type of situation as the day and the week, right? So if we're looking at the downside, there's more magnitude, so it would give us better, risk to reward. But again, we're just going to move with price action, and we're not making predictions. So the 2-1-2 down will be triggered if price action goes below the low of this candle, which is 25.46. So 25.46, and again, this is a 2-1-2 down. It's a 2 up 1-2 down. So it's a 2 up green 1, 2 down, triggering at 25.46. And since it's a reversal strat, it has a magnitude, not just a target. So a very defined trigger and a very defined target. It's the difference between a continuation and a reversal. I like playing reversals better because you get not only the trigger, but a very defined target. A continuation, you get the trigger, but then you have to continue to play it by feel, right? Looking at different time frames, taking into account, anything else that might be happening throughout the day. So that's why I like reversals better, especially reversals back into full time frame continuity. Those are very strong, but reversals give you the clear defined entry and defined exit. So our magnitude to the downside is going to be 2490. All right, so an extended target we can have here. We'll leave the ones out there that we already have from Friday because we had an inside day. We have the 2412 and the 2295 as wait, that's a magnitude. That would be a 2-1. I'm sorry, a 2 up combo 2 down, because it would take this candle and another candle to go past the low here. So that's where we get this 2453. 2412 20. What's this 2295? Why do we have it so low? Oh, that was a 1 2 up 2 down on the 8 month. So let's take that out of there. All right, so we've got 2490 as our magnitude, right? Our next target will be the top of this gap, which is 2453. 2453. Remember, you don't need huge moves in SOXL to get from a dollar perspective to get a big percent move, right? So 2453 and 2412 is the low of this gap. I'm sorry, the close of this gap. So we'll use that as the next target, and then we'll leave the 2198 out here if I believe. Wait, 20. Oh, I'm thinking of the week. I apologize. 24. So we have the bottom of this gap as an extended target, and then we look at the bottom of this candle for our next extended target. So 2362. All right. So we have our triggers and targets to the downside. Let's do triggers and targets to the upside. This is a 2-1-2 up, triggering at the high of this candle, 2578. This is a 2 up, green 1, green 1, 2 up, triggering at 2578 with a magnitude of 2583. That is the high of this candle, right? Then we have our extended targets that we'll leave out there that we had previously, 2604. 2604. Another major fib that I like to look at is the 2024 run-up, last year's run-up. You can see this 2601 is the 78.6 fib. And then if we look at the this 2604 is the 50% of last month. So that 2601, which is 78.6 fib of the 2024 run-up, and 2604 kind of stacking together, giving us a strong point of rejection, a possible rejection, but basically target point. So we got the 2604 and then 2674, which is the high of this candle, right? So if we clear this last month's 50%, we're looking for the high of this candle. We cleared that daily downtrend line, so we don't need to worry about it. So let's go back in here, and now that we've got our 4-hour triggers and targets to the downside and to the upside, let's go ahead and move on into the day. Now, one thing that we know about the strat is if you have a reversal on the 4-hour, the magnitude of that reversal is the trigger for the 1 day. So the magnitude of the 4-hour reversal, 2-1-2 down reversal, the magnitude is 2490, so that's going to be the trigger on the day. And then the magnitude for the upside on the 4-hour, the 2-1-2 up, that's a reversal, 2583, that magnitude is going to be the trigger on the day perspective. All right, so let's go back out here. Let's switch to the day chart, and we can see that to the downside, this 2-1-2 down, the low is 2490, and we've already got that in here, 2490, because that's the magnitude of the 4-hour reversal. So this is going to be a 2-1-2 down. This is 2 up, green 1, 2 down, triggering at 2490 with the magnitude of the low of this candle, right? So that's 24.53. 53. We have our extended target of the gap close, which is 24.12. Oops, that's the mag. Why didn't I have that in there? Magnitude. And then we target is the gap close, which is 24.12. All right, and our extended target is going to be 12, the month flip right here, because we've got the market makers expected move right below it, and it's shown support being pretty strong support previously. So 23.57 is going to be our extended target. All right. If we look at the lower low on the day perspective, that is 22.95. All right, we like to keep track of our lower lows because a lot of times those can act as magnets. Actually, we'll leave that one out there. Don't need too many. All right, so let's mark to the upside. We got a 2 up, green one, 2 up, triggering at 25.83, right? That's the high of this candle. The magnitude being the high of the previous day's candle, which is 25.88. So not a lot of magnitude, but there is something there for a defined exit if you wanted to play it. I wouldn't, but it is there, right? And then we have our extended targets that will carry over from the day, from the extended 4-hour targets, which is the 26.04 and the 26.74. That would only be $1 move on the day for SOXL, so I might look for one more. The 26.74 is this high. $26.74. I'd probably go for the close of this candle, which is 27.61. Just as an extended target, right? 27.61. It still wouldn't even take us to the magnitude here on the week, so it would roll us. It would help trigger the week, and then it's not quite the extended, but we would have the extended target here on the week then after if we clear 27.61 of 28.16 from the week perspective. So you can see how all these roll in together, right? If you were to get the trigger to the downside on the 4-hour and it reaches magnitude on the 4-hour, that then triggers the day. If it reaches magnitude on the day, 24.53, it doesn't quite trigger the week. But if it starts reaching these extended targets, we're getting closer to it, right? And then maybe the next day we trigger the week. The next day, Tuesday, we might go past the 22.95 and then trigger the week. At the same time, the magnitude on the 4-hour triggers the day. Magnitude on the day in this case does trigger the week. So we want to see that upside movement because this is like a domino effect. Okay, we trigger it if we reach the target here, then it triggers, and we reach the target here, that triggers. Now we're looking at this 28.16, and we're getting close to the trigger for the month as well, right? So, I'm sorry, for the 3 on the month. This would not be a combo 2 up. This would be a green 3, right? Because we already triggered the 2 down on the month. It's only underlined and not bold because we're back above 23.58, so it's no longer in force. Same kind of thing goes for the month though. I'm sorry, the quarter. Quarter flips at. Goes 2 up at 25.84. We're at 25.71. So it has triggered it. It's just not in force at this time. It's very close to being back in force. But how is this 24? That up. Okay, yeah. So that would trigger that triggers to the upside. So we're green still. We're just not triggered 2 up to the upside. So the month is green. The quarter's green. We're just not triggered up. At the same time, the year has triggered the 2 up, 2 down to the downside. We did reach the first target, which was 919, but it never did reach the magnitude of 621. So again, we've got to kind of keep in mind that the direction has not been chosen still, right? But there we have it, our triggers and targets. Once we get an opening print on Monday, we'll be able to go ahead and document the flip for Monday. But for the time being, again, we just take into account on Monday. If price action is above opening print, we get in calls, especially if we get a higher low. First target being, either the 4-hour trigger to the upside, overnight high, or previous high day, whichever one comes first, and then the next one's in order, right? Same thing to the downside. If we get the lower high below opening print, then we're looking at puts. First target being, previous low day, overnight low, 4-hour trigger to the downside, things of that nature. So that's the recap for the weekend. I hope everybody enjoyed it. We went over Friday's price action at the beginning of the video. We looked at SOXL from a wide view perspective, which you need to do, at least once a week, is just pull back and look where are we at things. Especially if you're more scalping and day trading, you tend to get stuck on those lower time frames, day and lower. But you want to make sure you're looking at the week, the month, the quarter, and so on. That way you have the bigger, wider view of what exactly is going on. Because while the 4-hour or the day may be in a downtrend, we're still in a strong uptrend from the week. We're strong uptrend from the month. We could be in a strat with full time frame continuity. You got to just make sure you know everything that's going on from a wide range perspective as well, to help you with your scalps and intraday trades. So if you like today's video, make sure you subscribe to the channel. Make sure you get more content like this. Make sure you hit the like button as well. It helps the channel grow. I think this trading method, I know it's repeatable. I've used this strategy for more than just SOXL. This channel just happens to focus on SOXL. So it's repeatable, it's proven over the years. And so I just wanted to make sure I got that out to other people, hopefully help them, crack the market in a way that they can really help you out, that it can really help you out, right? Like if you can generate another stream of income, either on a daily basis from intraday trading, or you can pick the proper times to enter longs or even short the market. You've got another stream of income there, even if you've got a W-2 job, or you own your own business or whatever. It's just another stream of income, and just a way to make life a little bit easier for you. So I want us to be able to spread that word. SOXL is one of the best, from an options perspective, one of the best choices you have out there. It's got very high delta to low theta ratio. The premiums are generally low, so you can load up on contracts, and the underlying stock, the underlying ETF, has very high beta, which means you're going to get a lot of movement, even on a day-to-day perspective. So it's just something I'm trying to spread the news about. I'm not selling anything. I don't have merch or anything like that. I just want to get this out. So make sure you hit the like button. It really helps the channel. And hit the subscribe button if you liked it. That way you can continue to get this content. I hope everybody has a great rest of their weekend. Make sure you get some rest, but make sure you've hit those charts and you're prepared for Monday and the week ahead. And make sure you follow us on X. We'll be live and in action all throughout the day on Monday. And we look forward to trading with you.